Welcome back to the second half of the Future Show here on the TD Ameritrade Network. Ladies and gentlemen, we're less than 60 minutes away from the cash open for stocks on Wall Street. We've been talking about the bid. We've been seeing some of the strong economic data that's behind it. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, is joining us this morning to continue this discussion. Scott, welcome. Thanks for joining us on this Tuesday morning. No numbers at the bottom of the hour for us to take a look at, but later this morning we've got some focus on the manufacturing data, which has been coming in pretty strong recently. We've been talking about it throughout the show. We've got Fed Chair Jerome Powell, Steve Mnuchin. They're probably going to make another plea to lawmakers to add some more stimulus to the economy. I imagine these are going to be major focal points for investors today.
Yeah, they should be. The manufacturing number, like you said, they've been pretty decent lately, and probably expect the same here. But the focus is going to be on the talks between Mnuchin and Powell.
Okay, definitely a lot of optimism headed into, we're talking about the bid in the indices as we get set for the cash open. And I did notice in Fed Chair Jerome Powell's prepared comments, he's going to say that the U.S. economic outlook is extraordinarily uncertain. I think that's the theme that we've been hearing, but certainly it's been improving, it seems like. We were just talking about the emerging market index or ETF that's been a reflection thereof. And we were talking a little bit about some of the economic data that we've been seeing, again, in terms of manufacturing data. I just wanted to take a quick look at some of the data that came out. First and foremost, some of the unemployment data that came out of Europe, because I'd imagine once we get past the middle of the week here, Scott, into tomorrow,
Friday morning,
the focus is going to really be, as you mentioned, Friday morning on the jobs data, correct? But as you speak to that a little bit, can we just pull up that German unemployment numbers that we saw here? For the most part, 6.1%. They were looking for 6.3, prior 6.2.
Yeah, and I think, we're probably going to see something similar here. I know that the number is supposed to show a lot lower than where we have been trending, and that will be of concern. But I think when you look at the Eurozone numbers, you're seeing things kind of in line. You're not seeing things worsen at all, which is a good thing. And, as you said, as we get past tomorrow, Friday is going to be the focus. And are we going to see a massive, massive slowdown? I mean, there's a little bit of an expectation for that we're still going to see gains, but it's going to be the lowest number that we've had basically since the job recovery had started.
Well, it'll be interesting to see if that point the market's able to shrug off some of the concerns that it has been able to thus far, as it's been kind of crawling or clawing up this wall of worry. I wanted to bring in another data point into this discussion, because obviously it's not just in terms of focus being on inflation here in the U.S., but it's globally as well. Take a look at some of the numbers that we saw out of Europe in terms of their CPI, core CPI, month over month, year over year. These numbers, again, are kind of feeding into that narrative that we've been seeing. I mean, look here, Scott. I was joking around. I wrote the newsletter this week. On Monday, I said, I equate it to where's Waldo, where's inflation? Certainly not in the Eurozone.
No, it's certainly not. And even though there's been talk about it here, it's not here either. And it's not going to be here for a while. So, I think that's a theme that even though, economists and pundits are talking about where is the inflation, it's not a concern here for a while.
Scott, without it being a concern, I'd imagine that's probably what's weighing on the dollar. Where do you stand on some of the weakness we've been seeing? I mean, it took out some key levels, but it seems like energy and follow-through thus far has been somewhat limited. It's holding these lower levels, but even yesterday, after breaking down below 91.72, it rallied back up and through 91.80. It just didn't really want to open up the door so far to the downside yet. But again, I guess no rejection of these new lows.
No rejection, Ben. I mean, dollar is down, about 2.5% in November, lowest point since April of 2018. And, what you're seeing is a big boost for some of the risk currencies, given the vaccine news coming out here. And, it's almost a 6 in one, half a dozen in the other, because you're getting all this negative news about the spread of the virus and lockdowns, yet you have the vaccine hopes on the other end, and in the market seems to be hinging on the vaccine hopes, and that's really what is causing the massive pressure on the dollar.
All right, we've got pressure on the dollar. We've got other foreign currencies which have been on the rise. We were taking a look at that at the top of the show. We've got a lot of focus on the jobs. Fed Chair Jerome Powell, it sounds like, should be another one today and tomorrow as well. Scott, I appreciate you joining us and giving a few minutes here of your time this morning and sticking around to share some of those thoughts with us. Ladies and gentlemen, Scott Bauer is the CEO of Prosper Trading Academy, joining us to talk financial markets and, well, some of the fundamentals behind them. Now,